Ed Ponsi here, your FX educator here on behalf of FX Street. Futures are up mildly, right? And so you've got the Dow up 28, NASDAQ up 23, S&P up 6. So looks like it's going to be a mildly bullish open. And that continues a little string of bullishness in this market, what I believe to be another bear market rally, but I guess we'll find out, right? We shall see soon enough. So welcome back, everyone. It's great to be here. If I'm not mistaken, I'm also with you folks tomorrow. And then I'm heading down to the beach. So let me just double check that while we're waiting. So I do have a few setups of interest here. Mainly, I'm going to focus on the Swiss franc. Now, as you know, we already have a Swiss franc trade cooking. And it involves the euro against the Swiss franc. Chewy doesn't want me to talk to you guys. He just wants me to play with him. But Chewy, just be good. Okay, so here's our trade with the Swiss franc. It's the euro against the Swiss. We are long the euro and we are short the Swiss franc. So that creates possibilities, right? If I'm already short the Swiss franc on this trade, could I go long the Swiss franc on a different trade? And then I'd be in balance, right? Then I'm thinking of the portfolio as a whole, right? Does this help to create balance? Bruce says we love Chewy. You hear that, Chewy? You are loved. He is deeply loved. Everyone loves Chewy. So let's talk some more about the Swiss franc because, I like this setup. Now I'm long Euro Swiss. If you missed it, we've got the first two entries filled. And if it hits 102, we sell 1/3 of what we got and we move the stop up to 107.20, 101.75. And what we're hoping for at that point, that it just blasts off and hits all the other targets and just keeps going and, all the way up to 105.50 maybe, right? Just keep it rolling. But, that is a situation where we are actually short the Swiss franc. And it creates a situation where I can go long the Swiss franc on a different trade. All right. And in doing so, I still have what I call balance, right? I still have a balanced portfolio. We'll have some long Swiss and some short Swiss, right? And we're not going to bet the farm on one currency. That's not a good idea. Chewy says, follow your risk management, Ed. Do not bet it all on the Swissy. Or against the Swissy. So let's go. What do we have here? I'm going to start you off with some pound Swiss because we are short the Swiss against euro, but we can go long the Swiss against pound. It looks like the pound here is having a very difficult time with the Swiss franc. All right. And the pound is in a downtrend, in fact, against the Swiss franc. And you've got 10 candles that are almost completely underneath that 10-day moving average. If I count from the current candle back, I've got 3, 6, 9, 10 candles where there's either no wicks or just a little bit of wick above that moving average. So this means that it's a sharp move. It's a strong trend. When the price is completely on one side of the moving average. Excuse me just for 1 second, guys. Chewy, where you at, buddy? I'm sorry, people. It's the first time I'm doing a first time I have a co-star, right? So, all right, let's short this puppy. If it comes up to the 10-day exponential, I'm a seller. Okay, so 1.1867 for pound Swiss. And one of the things I think we got to be aware of right now, first of all, that is the moving average. 1.1876, no, 67. Right, there he is, 118.67 is the moving average right now, and that's also our entry point, right? Now, in a trade like this with a very strong trend, we're not necessarily going to have a target, but we're definitely going to have a stop. And let's pull up the ATR, average true range. And this is measuring the volatility over the last 14 days. And you can see it's a pretty volatile currency pair. The expected move is 117 pips per day. And you might be looking at that and you're thinking, Ed, how did you get 117 out of that? Just the easiest, simplest rule of thumb is this. The ATR, when you're using the major currencies that we use here, you notice we're not using Norwegian krone or anything like that, right? When you're using the majors like the pound, the euro, the Swiss franc, the dollar, the yen, Canadian dollar, Australian dollar, New Zealand dollar, all of those, any pair that you can create from those 8 currencies, any pair you can create, any combination you can create from that, the ATR is going to be in the neighborhood of 100. It's going to be around 100 pips per day movement. So this is 117. It's not 11,777, right? It's 117. So the formula is we take 117 and divide it by 2. Let's get that first. 117 divided by 2.
There's nobody calling right now.
I know there's no.
Let me know if you'd like to make a call.
No, I don't want to make a call. 117 divided by 2.
It's 58.5.
58.5. Round that up to 59. My stop should be 59 pips above the moving average. 59 above. So 67 plus 59.
That would be 126.
It's 119.26. So in other words, think of the ATR is your averaged size candle. The average size candle right now is 117. Okay, fine. 117. Add 117. Well, first of all, divide 117 into 2, and you get 58.5. Round that up to 59. Take 118.67 and add 59 pips, and you get 119.26, and there's your stop, right? There's not going to be any target because we have no idea how long this trend will continue. And I think the Swiss National Bank caught a lot of people off guard when they decided to raise interest rates by 50 basis points. I think just like a week or so ago. And I doubt that they're finished because they still have a negative interest rate. The key rate for the Swiss National Bank is still negative 0.25. So perhaps they've decided to at least bring it up to 0. Because for years they were at negative 0.75 for years. And now, right, now it's, we're going back to perhaps back up at least to 0, if not positive interest rates. Why would Switzerland do that? Why does Switzerland have a negative interest rate? Well, think about Swiss banks for a minute. Swiss banks attract money from all around the world, especially For example, right now there's a lot of war going on in Europe, and I'll bet a lot of those participants are putting their money in Swiss banks. Okay, fine. But if Switzerland gets too much money coming into Swiss banks, it makes the Swiss franc stronger. It's called a capital flow, right? If capital is flowing, if money is flowing into Switzerland, then follow the money, because that's the currency that gets stronger. The one that has the capital flows gets stronger. And by having a negative interest rate, Switzerland was trying to stop capital from flowing in. They were afraid of a strong Swiss franc. But a strong Swiss franc does have one advantage. Switzerland probably has a lower rate of inflation than most countries because they have a stronger currency than most countries right now. And just like anyone else, they're fighting inflation and they want inflation to be lower still. And how do you do that? You do that by raising interest rates. So you've just got, most of the central banks of the world these days are now raising interest rates. Certainly the key ones, right? The ones that we look at. So right now, if we get into this trade, and I don't know if it's ever going to hit the entry point, this entry point is only good for today, right? But if the entry does occur, then I am Swiss franc neutral is how I would describe it. I would be neutral, the Swiss franc overall. Why? Because I would be short pound Swiss and long euro Swiss, which means I'm neutral. Those two positions cancel each other out from a risk management standpoint. I'm not leaning long or short. And you know what that means? If I'm completely neutral on the Swiss franc, then if I want to do a third Swiss franc trade, I can do it, either long or short Swiss francs. I am free to do a third Swiss franc trade. Why? Because my first two cancel each other out from a risk management standpoint. That's what I mean when I say neutral. My first two are neutral. So I have a short setup for pound Swiss. I have a long trade that I'm in for euro Swiss, right? So should I go long or short the Swiss franc? From a risk management standpoint, it doesn't matter because I'm currently neutral. But I do want to buy some Swiss francs, perhaps, against the Japanese yen. Because look at this. Here, let me get this out of here. We don't need those lines. But this is a pretty good trend, right? Swiss yen is a pretty good trend. Why don't I just do dollar yen? I'm already long dollars against the euro. I'm trying to get long dollars against Aussie. Come here, boy. Chewy, come here. Little dude will bark at anything. Pound Swiss, we just adjust the entry on a daily basis based on the discussed parameters. Correct. In fact, I will be here with you tomorrow. So if you want to adjust them with me, that's fine. So, be sure to stop back in tomorrow and we'll do it together, assuming that we don't get in today. But why am I not interested in dollar yen? First of all, this chart doesn't look that great. This doesn't look that, it looks okay, but it doesn't look that great to me. Like this looks like it could be losing steam. Whereas Swiss yen does not appear to be losing steam. Price is nicely above the moving average. We have 7 consecutive candles above the moving average. and a whole slew of candles above the moving average prior to that dip. So we want to see a dip, and we want to see it come down. We want to see it come down to 139.52. 139.52, because the decimal for Japanese yen pairs is in a different position than on most. There we go, 139.52. And the ATR, look at the ATR on Swiss yen, 177. That's a bit surprising, right? Swiss yen moving 177 per day, right? Not a little, that's a lot. 177 divided by 2.
That would be 88.5.
So 88.5, round that up, 89. We want the stop to be 89 pips below the entry. That's going to be 138.63. I think I got that right. Yeah, okay. 89 pips. So why is this one wider, right, than the last one? Why is this stop wider on Swiss yen than it was on pound Swiss? And the answer is because right now Swiss yen is more volatile. I wasn't expecting that. In fact, if you had asked me which of these two pairs is the most volatile, I would have probably definitely opted for pound Swiss. That thing can be very volatile. But right now, Swiss yen is the more volatile pair. That is very interesting. Okay. All right. So thank you, Bruce. Thank you, Richard. Let's get just making sure I caught all your comments. So as I mentioned, I will be here with you tomorrow, coming to you from Disney Springs. And that'll be, tomorrow will be my last for the week, because after that, I'm heading to the beach. But I'm just here in Orlando so the girls can have some fun at the parks. Okay. And so I'll be here tomorrow. And some of the other segments that are coming up this week, Jason Sen on June 29th at 12 GMT. Bojan Petreski on June 29th at 13 GMT. Those seem like they would be worth attending. All right. So tomorrow there's a couple of good speakers on here. So, check it out. As far as the economic data, we said earlier that the durable goods came out on the strong side a little bit. That created a sort of minor boost, a minor drop in the futures temporarily, but they bounced back up, looking like they're firming up as we get closer to the 9:30 open, which is just 10 minutes away. So that's coming up soon. Pending home sales are coming up in 40 minutes. That should be a good indicator of the housing market. And we do have Lagarde speaking a little bit later today. I missed that earlier. Lagarde is speaking later today. So something, who knows, right? She's the head of the ECB. So maybe we get something that moves. And she's going to be speaking today and tomorrow morning early. So, that's definitely next to Powell. That would be the one speaker that has the most potential to move the currency market in general. Okay. All right. Tomorrow we're getting crude oil inventories. Now, crude oil inventories have been a mess lately. They actually, messed up all the numbers and didn't report. I think it was last week or the week before. They're just having problems. it's funny how we have all these problems that we never had before. It's just weird. But that's scheduled for tomorrow, crude oil inventories. They're not even giving a time for it. But last week they couldn't get the report together at all, which is sad. I think the number folks are going to be focused on later this week will be GDP for the U.S. is coming out on Wednesday. Now, we already know that that's going to be a negative number. That's the final for the first quarter. It's next month's GDP that is very exciting because it'll be for the second quarter, which is ending in just a few days. Of course, if we get negative GDP for 2 quarters running, then we are officially in a recession. But frankly, I don't know if that matters. I think parts of the economy are clearly in a recession and parts are not. It's just a weird situation right now. So anyway, those are the big things that are coming up this week. Flipping around here, I just want to check on our previous situations. Euro Swiss is not moving. Currently 101.45. We're long. We're being patient with this one. Euro USD. Euro USD is, we are long, and it is, we don't want this to come up, but it doesn't care what we want. It's coming up, right? Not something that we're crazy about, but that's the way it goes. Aussie USD. This one, we'd like it to come up so we could get short. So we'll just have to wait and see what happens here. We're loaded up on for Aussie USD. No entry yet. Still pretty far away. Really, it's over 100 pips away from the entry. So probably nothing going to happen on that one today. Checking the S&P futures really quick. S&P futures still climbing. A little bit of a rally here. Is it a bear market rally? I think you've got a big psychological number at 4,000. We might test that today. But the big deal, the big test is point C up here, which is really 4,200. If S&P can get above 4,200, then it's no longer a bear market rally. It becomes a higher high. Until it can prove itself by getting above 4,200, I'm still overall bearish. Although if you want to do some short-term trades to the upside, there's nothing wrong with that. The NASDAQ, NQ, again, hanging right on that neckline / trend line. The Dow, pretty big day yesterday. They all look like it's going to be a mild open. You'll notice every candle for today also has a wick on the top and the bottom. So it's been a little bit volatile, but it has not amounted to too much at all. The Russell, RTY, these are the small stocks. This is still in a channel. This is probably the weakest of them all, really. This is still in a bearish channel, and it's in the center of the channel. You know, you could short. We tend to short at the top of the channel. You can short in the center of a channel, though. And, you know, it's not unheard of, okay? Because the center of the channel, the blue dotted line, is the mean. It's the return to normal. It's the point that the price continually comes back to, right? So if you want to short off that, it's not unheard of, but it's not something I'm going to do right now. One of the biggest things, right? Let's look at the hard commodities really quick. Oil, crude oil. Did you see the way that thing came down to the trend line? It's just hanging right on that trend line at 107 right now. I think if you're a consumer of this product, you really want to see it break that trend line. Natural gas, NG, has just been in a free fall, which is kind of amazing. You know, like who could have predicted that? You know, with the war going on in Europe, it's just crashing, which is great. You want to see, I don't want to see anybody starve or freeze, okay? So when fuel prices come down, I think that's good for everybody. Copper, Dr. Copper, what is your prognosis? Copper says, I think we're heading toward a recession. Look at this thing. Really, copper speaks more about China than anything else, but it also can tell you a lot about the global economy. And this does not look good for the global economy right now. Copper just does not look great. Okay, that's the hard commodities. That's the stuff, if you drop it on your foot, you'd scream, right? Copper, a barrel of oil, right? That hurts. But now what about the agricultural, the soft stuff? Corn. This is the most interesting one right now. This is definitely an ascending triangle, right? But what do I see within that ascending triangle? What do I see inside of that triangle? That looks like a head and shoulders. Could it be that commodity prices, even for food, are about to plunge? Is that possible? I mean, corn has been one of the strongest, partly because it's not just food, it's also an additive into fuel, right? In the US, we add corn into fuel, and I think they call it E85, ethanol, right? And ethanol, 85%, the regular stuff, and that means 15% corn. That's where it gets the E85 from, I guess. Um, but corn looks to me like it could drop. Man, I would love to see it. Now, remember, that trend line is lying just below, so there could be support there as well. But it would be wonderful if it would break the neckline first. First, let's see if it can break the neckline, and then we'll see if it can break the trend line. If it can break both of those lines, then I got to believe it's going to get a lot cheaper. Let's take a look at wheat. Wheat's getting a lot cheaper, right? That's a good thing. Oh, man, that's a good chart. And soybeans, this has been hanging tough, but it's been a lot of red lately. Is it going to form a head and shoulders? Or maybe it's already formed two left shoulders, right? So soybeans is the one that's probably causing the most difficulty right now, but even that's off its highs pretty nicely. Triple top? Wouldn't that be something? If soybeans and corn break down, wheat looks like it's already broken down, then we could be getting ready to see inflation really come down a lot. You add to that the fact that central banks around the world are raising interest rates and removing liquidity, right? The U.S. has already started the process of quantitative tightening, or QT. Were you aware of that? You remember quantitative easing, QE? QE is where we print money, add it to the money supply, but we went on a bit of a binge and created a lot of money. Well, now quantitative tightening begins, right? QT began in June. They removed $45 billion from circulation. That's not much, but that number should accelerate in the coming months. And it's better to be removing it than adding it, for sure. So, you take all these things and put them together, and it looks like asset prices could come down, food prices could come down, real estate possibly could come down. That's a supply issue, though. And that would, but falling prices, I think, economists fear it, but consumers do not. Okay. All right, everybody. What a couple of sessions we had today. Just to review, we have two new setups from this segment. Pound Swiss, looking to sell short. at 118.67 with a stop at 119.26. And Swiss yen looking to go long at 139.52 with a stop at 138.63. I'll be back with you tomorrow. And if we don't get our entries, we can set them up again tomorrow. Okay, so everyone have a wonderful day. Stay safe out there. My name is Ed Ponsi. This is FX Street. Thank you for listening.